Time for another weekly market analysis. This is for week number 18 out of 52. That's May 1st through the 5th. That is what the analysis will be for next week. Let's go ahead and jump right into it. We're going to have the futures on the top row, the ETFs on the bottom row, just so you know going forward. All right, let's take a look first at the monthly charts. So we'll start off with the Russell 2000 futures market as well as the S&P 500 futures market. Both of them I have labeled there as uncommitted. That basically means it is not a definite uptrend or a definite downtrend. It's not a definite bull market, a definite bear market. It's really, you can see going sideways or flat right here. No major decision one way or the other. If you look at the IWM and the SPY, same exact thing right there. Really this uncommitted price action, which makes it, at least for some trading tactics, much more difficult to trade. Other very specific trading tactics, much easier to trade, depending, of course, on what tactics you actually trade. But for right now, those two markets right there, really uncommitted, no definite major committed bullish market or bearish market. If we jump over to the Dow, it starts to change a little bit. Same with the NASDAQ, where now it's more slightly bullish. We can see a little bit more definition in the price movement, the price action. The actual structure of the candlesticks is a little bit different as well. We see on the Dow a higher low that has been forming this past month or two here, and so that's giving a little bit more bullish behavior. Price did rally up into that resistance, had the pullback from there, didn't really come down that much, relatively speaking, compared to the price action there, and is recovering quite nicely. So more bullish than the other two markets there. Same with the NASDAQ, definitely more bullish than any of the markets. In fact, it reacted nicely to that 10,500, 11,000 support area right there. That is held nicely, and we're getting a very nice bullish reaction from that. So the NASDAQ really is the strongest market right now. Over to the weekly charts, we can see the Russell is really just range bound. It is stuck in between that 16 or 1700 area all the way up to that 2000 area, and it just can't break above or below. And that's okay. I was talking about tactics earlier. Fine, play the range, play that tactic. Price goes down into that 1700 area support, look for bullish positions. Price rallies up to that 2000 area, look for bearish positions, and just play the range. I think it's one of the most simplistic ways to trade because price is just simply stuck in that range and it can't break out. It will eventually, of course. But as of right now, it's stuck in the range. So fine, just play the range on that. Buy low, sell high. Keep it easy, simple, short and sweet. All right, now if you look at the S&P though, we can start to see more definition in the price structure where we have these higher highs and higher lows. I drew that out on the SPY below. You can see that there, where we have that the black line, the higher highs, the higher lows, the support is holding. Now the resistance is also though at the 415 area resistance, that's been holding, but here's the catch. So is support. And so that support about the 380 mark right there, we're getting those higher lows in that 380 support price area. And every time it goes up into that 415 resistance area, price penetrates a little bit higher and higher and higher. So that tells me right there that the bulls, even though moderately or slightly are in control, but they are in control of that particular market on that daily time frame. So very encouraging for the bulls. We're starting to see some more bullish behavior coming out in various stocks out there, and so that's encouraging for you bullish lovers out there. All right, so now if we move on to the Dow, this is just flat out sloppy. I don't like this pattern one way or the other, either long or short. Yeah, you could buy the support, sell the resistance type of thing, sure, but it's just a lot cleaner looking on the Russell because it's a more defined sideways pattern compared to the Dow. So on the Dow, I really haven't touched this thing. It's just not clean. It's not clear. It's not compelling. There's just much better price patterns out there. You can see on the NASDAQ, case in point, look at the nice uptrend here on that daily chart. Since really the beginning of the year, you get your higher highs, your higher lows. I drew that out there in the black line on the QQQ. You can see that nice move up, a little bit of a pullback into support. That held around about 280, and now price has headed higher. So for the NASDAQ, we're definitely seeing some good strength. So the bulls are in control right there, and they're doing quite nicely, in fact. So if you're looking for buying opportunities, the QQQ, or the NASDAQ, the top 100 NASDAQ there, has been outperforming and still continues to have some good buy setups like Apple and Microsoft and a few others. And so I would continue, if you're looking for trade setups coming up next week, I would continue to start screening and scanning specifically for those top NASDAQ companies, as well as some of those top SPY or S&P 500 companies, because right now, those are the strongest markets. Yes, the Dow is doing okay. It's, you're challenging the resistance. It's right near the highs. Again, it's just a sloppier looking pattern structure. When we trade, we want to trade clean, clear, and compelling pattern structures that we can easily identify, that our brains can quickly react to. That's what I'm looking for next week, focusing on the major SPY leaders as well as the technology leaders. Again, Apple, NVIDIA has been pretty strong lately as well. Microsoft and several others that are really showing some good strength. And one way to find out is when you look at the pullbacks are fairly shallow and they recover quickly, making new highs, new recent higher highs. And so that's just one quick, easy way to find out who's leading the pack out there. But you'll find them in the NASDAQ and some of your top companies in the S&P 500. All right, so that's the outlook there and the picture of what's been going on the weekly chart. Overall, I would say focus on the NASDAQ and the S&P, maybe the Russell if you're looking for some buy setups or some bullish patterns. It's definitely down there towards the low area of support, the 170 area. Other than that, I'd pass on the Dow for now. All right, before we get to the daily chart real quick, coming soon, very soon in fact, free PDF downloads. You'll have access to all of the PDF files of what I'm covering and more. I'll be posting some more information as well in there for you guys to just keep and use and educate yourself on that. All right, daily charts, here we go. On the Russell 2000, again, you can see we're stuck in even a smaller range on the daily chart. I showed you we were stuck in a range on the weekly chart, and now you can see it on the daily chart. Also, we're stuck in a range, different range. So here, about that 1720 area, call 1700 to about 1840, 1850 range. Stuck in a smaller range there. So again, play the range, buy low, sell high type of situation there until at some point it breaks out. Now, listen carefully. It's important. Because the Russell is on that lower range, the lower end of the range on the weekly chart, and on the daily chart, we're also on the lower range, focus on bullish opportunities, buying opportunities, or long opportunities, okay, bullish opportunities. If price gets up into that resistance at about the 1840, I wouldn't expect it to hold very long, mainly because of that weekly chart. Remember, price is low on that weekly chart in there, and so if price goes up into resistance on the daily chart, don't expect it to hold very strong because we're in that support area on the weekly. Okay, so just something to keep in mind. In other words, what I'm really getting at here is focus on the buy setups, focus on the bullish patterns there. Okay, all right, on the S&P 500, we can see that resistance did work. It worked out okay. It just only went down a little bit. Price came right back up into that resistance, and it came up strong as well. Those last 2 weeks really fired up there quick, and so that's called a bear trap, where price drops down a little bit below support and then just makes this very abrupt U-turn and rallies high real quickly, and that's exactly what we saw there on the S&P 500. Now, normally that's actually a very bullish pattern. Just think of it this way. When traders are expecting for price to go down and they take a short position trying to capitalize on that downward movement, and then it doesn't happen and price whips right back up, stops them out very quickly, and rallies even higher, that is a very bullish pattern setup. In other words, a failed short setup is a bullish pattern, and it works the other way around too, vice versa. So right here, I'm expecting price to have a pretty decent follow through next week, meaning price heading higher. Okay, so keep your eyes out for that. If it doesn't, it doesn't. We have a plan for that, or you should have a plan for that anyway. But that's the expectation next week. Be flexible about it, because as traders, you certainly may have a bias or an expectation or a plan or whatever. It can change in a moment. And I'm sure if you've traded long enough, you know exactly what I mean. It can change in a moment. One economic report could change it. One announcement could change it. One anything could change what you think is going to happen in the market. So it's okay to have this expectation of what's likely to happen. That's fine. That's just playing the probabilities here. However, you can't be so fixated on it. You have to be flexible and understand that things change, and you need to be able to adapt quickly to the new trading environment. All right, on the SPY, you can see there, I just put the little black lines on there showing you that we had that nice uptrend, and then it had that drop in price below support, about the 407-ish area. It pierced below that support there. It came down to about 404-ish or so, and then just whipped right back up really quickly. So that's that dip below. That's that bear trap right there I was telling you about. So the direction is definitely bullish. The location is bearish. We're right up in that swing high, right where price is at now, about that 415 area. There is some overhead resistance about the 420, 425 area, so do pay attention to that. If you are looking for bullish setups next week, pay attention. You do have resistance pretty close to overhead there, so your profits may not be able to run very far, so make sure you're double checking that. On the Dow, really not much of a play here. It's in resistance right now, so obviously no buy setup on that. Possible short setup, however, a lot of these other markets are looking pretty bullish right now. That's the direction. I don't want to fight that strong momentum right now. So any short positions, you got to really make sure it has a solid and clean setup, obviously with the buy position too. So keep that in mind. So yes, the resistance did work, but really not by much. It dipped down a little bit and then right back. So again, we're back to bullish. All right, and then on the NASDAQ, we can see I put a little gray box looking area, that rectangle there. It's just stuck in a range from that 12,800 to about 13,348 or so, 350. It's stuck in a range right there. I would expect price to burst out of that range one direction or the other pretty soon here. Normally, price doesn't just keep going sideways for a very long period of time. And we've been going sideways for many, many days now. So I would expect price to either break out above or below pretty soon here. So do keep your eyes open for that. We're still in that contraction or that tightening pattern right there, stuck in a range. And anytime price is contracting for a pretty long period of time like it has been, expect the expansion to happen next. Now, you got to be aware of something though on the NASDAQ, the futures. There is overhead resistance at 14,000. Make sure you watch out for that. Okay, so for any of you that you're in bullish positions on the NASDAQ or any other NASDAQ stocks out there, if and when price does get up into that 14,000 resistance area, good place to start looking to take some profit on that. You will have sellers at that 14,000 area. It's a big resistance, big psychological number as well. So there will be some fight going on there for the bears. Selling, so good spot to take some profit. And then the QQQ, it is breaking out of that daily range, which is good. That's positive. That's bullish for the NASDAQ. Again, there's that theme again. The NASDAQ is bullish more so than the others. So it had that little dip below. Again, there's that bear trap. So that's going to be bullish. There is some overhead resistance right above it, though. I will say this, though. The momentum that we've seen could definitely carry us through that resistance. You just got to be aware of it and be obviously careful about that. All right, so there you go. There's our daily chart analysis. Stay tuned for next week. We'll have more updates for you. God bless and good trading, everybody. See you next week.